Good morning, everyone. Today's the 25th of November. We are looking at a holiday week. Remember, shortened holiday week. And we're trying to plan out what's going to happen here. Now, the SPY right now is up quite a bit. Pre-market 598.52, really pushing up into this upper area. I had mentioned that we have the anomaly event potentially setting up here between now and roughly the end of November. We have this big rally phase taking place with pre-market activity. We have to really watch this level here, this 600 roughly level to the upside. If we get above this level, then we are continuing back into an uptrend. We're obviously bullish right now. The anomaly pattern, excuse me, is basically this pattern here carrying forward. So we have this flagging setup taking place right now, and I could draw it out a little further if you want, but it's basically coming right across here, flagging out kind of like this, and this. And we have seen this before. As long as we stay in this kind of a channel, carrying all the way out here, long as we stay in this channel and stay below this upper level right here, then we have the potential for a rollover breakdown down into this low. Okay, wherever we happen to be today, if we get a big pullback and stay below this $600 level on the SPY, then we have a chance at that anomaly event coming in. Technically, and I'll be honest with you, if we get up above this $600 level, we could, that indicates that we're bullish. We're moving into a new bullish trend, and we would look for rejection. So where is rejection? Let's take a look at what rejection could be. Here's a good example of, where we rally, we pull back, we kind of build a little flag, we get above it pre-market, and we reject back down. So this is an area here that is very clear rejection right here. What happened here? This is technically called a scouting party, where price comes up, tries to move above the previous resistance area, runs into extremely strong resistance, and then gets crushed back down here to the downside. And that would be a sign of rejection. It's happened over and over again. We could find, multiple examples of it. Here's a good example again. We come across this level, we run into resistance pretty much right across this level. We then close above that level right here, get into really new uncharted territory, and then we reject right back down to the downside. And this is an example of price rejection after reaching a new high. So what I'm trying to warn you guys is that as we come over here and move potentially up into this upper channel, we could get up into this 600 level, maybe a little bit above it, and then immediately reject back down into a lower channel. That's something that could happen. So we have to be aware of the technical A and B structure. So I want you to think about it like this. We rally up, we hit a peak. Okay, perfect. We go through a pullback, the first phase of the excess phase peak pattern. No problem. We move into this sideways flagging, which is in a moderate uptrend. Okay, great. We're moderate uptrend through here. So we should be expecting the markets to continue to move higher until we get a confirmed breakdown. At that point, we move into this downward trend, trying to move to a new lower low below this level here, and we're looking for this low. So we don't have that breakdown yet. We don't have that breaking of the flag pattern. We are technically still in this uptrend, and the SPY is moving higher. We'll see what happens when the market opens. If it continues to move a little higher, 600 is a very big psychological level. So we are in a SPY cycle pattern, which is a carryover trend in bearish trending generally. Even though, look, the data is incorrect again. I got to fix that. I don't know why Excel does that. But I'll fix that up for you. We're in bearish trending, and the moving averages have not rolled yet, obviously, with this crappy data. That's part of an Excel problem. And we're looking at really trying to defend this area. So what I expect to see happen here, we get a little bit of movement, maybe up into the 599, maybe up into 600 area. And this would become a very big psychological level. And I'm very cautious of a breakdown here. Coming into the holiday weekend, with the Thanksgiving coming on Thursday and then abbreviated shortened trading day, I believe, on Friday. I wouldn't really get too aggressive here. Remember, I came over here and told all of you to get to 80 to 85% cash over in this area. Whoops. And I really believe that that's where we need to stay. We're going to probably try to move into like a 65, 70% mode back over here after Thanksgiving, around early December, if we get this bottoming formation setting up. Remember, this is contingent on having some sort of a breakdown anomaly event. So far, it doesn't look like it's going to play out, but remember, my anomaly event really goes out until around December 10th through 15th. So we still have another 2-3 weeks for the anomaly to hit. So again, I'm not saying that we're uber bullish at the moment. We would need to clear this and move into very consistent upward trending. I'm cautious of, and I would still be cautious of, these types of, rolling highs like I showed you here with rejection. And then there was another one back over here that I showed you with rejection right here. These type of rejection points happen often. And again, I mentioned to my followers just in a weekend video last weekend that you're typically getting, and if you take a look at this on the SPY, you're typically getting 5 to 7 day setups. Okay, so come over here, go away, and you can see, you get these little, like here, a little 5 to 7 day move like this. And here, another little 5 to 7 day move like this. Boom. So when you look here and see where we're at, we have really 1, 2, 3, 4. Today would be our 5, 6, 7. Today would be our 7 day move, hypothetically, from here to here, close to it, 6 or 7. And that would be, in my opinion, an exhaustion of an uptrend. So we will see how that plays out. And this is just, looking at the chart. You see if I can come over here and this is the chart that I shared with my followers throughout the week. This is weekly, but if we come into daily, hold on, I think it might have been this one. No. So let's just do this. And what you can see pretty much on any time frame, you go anywhere in the chart, and what you're going to find is roughly a 5 to 10 day window for for cycles. Okay, so here, this is a little longer, but you can see we have 1, 2, 3, 4, 5, 6, 7 pullback, 1, 2, 3, 4, 5 top. So here you have basically a 7 moving to a 5 right in here. Then you have this pullback trend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There you go. 10 down to here. Then you get a 1, 2, 3, 4, 5 up into this area. So sometimes they can be a little short, but that's a 4 or 5 right there. Then you get a rotation. Let's count this. 1, 2, 3, 4, 5, 6, 7 down to the low. So from here to here, down to the low, 7. Then you get the little 1, 2, 3 up. 3 is probably about the shortest you're going to get. Then you get this 1, 2, 3, 4, 5. Here's a 5. Here's a 3. Here's a 3. Here's a 1, 2, 3, 4, 5, 6, 7, 8. There's 8 coming up here. So you can see how we get these rotations. And even though they look big, what you're really seeing, like in this trend here, it's about 22 bars. But let's count it out. 1, 2, 3, 4, 5, 6. Let's call this 6 right here. Then you get about a 3-bar pullback down into here. Then you get a 1, 2, 3, 4, 5, 6, 7 up to the peak right about there. You get a tiny little pullback lasting about 4 bars right into here. Then you get a breakaway 1, 2, 3, 4, 5 right up to here. So the average real trend is, in my opinion, roughly 5 to 8 bars. And then you should be looking for exhaustion. And I believe this is going to hold up. And the real range, is 3 to probably 15 bars. Most common are 3, 5, 7, 9, and probably 13 to 14. Now, the way that I would look at this is take a look at Fibonacci numbers here. So 3, 5, 8, 13, and then 21. So do you see any similarities there, guys? You see any similarities? Yeah, that 7, 8 range, 7 to 9 right here is really moving into this 8 area. So, here's an example of how you can kind of think of it. So you see this 7, 8 or 7, 9 is really lining up right here with this 8. It's just a plus or minus 1 of an 8. And that gives you an idea. And you can count these over and over. I mean, it's just clearly evident. 1, 2, 3, 4, 5. Okay, there's a 5 down to here. Then here's basically a 3 or 2 or 3 moving up. And then if we count this first bar, we have a 1, 2, 3, 4, 5, 6, 7 down to the low. Then we have a 1, 2, 3, 4 up to the top. And again, you get your little anomalies every now and then, outside of the most common. But this is showing you that this is the SPY. And now look, this is a long one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Wow, 14. Look at that. How did we know? And we exhaust. 14 lines right up here with 13. Right there. So what you're looking at here in this move currently, right over here on the SPY, is you're looking at, if we count this as the bottom, 1, 2, 3, 4, 5, 6, maybe 7, and then we roll. But we'll see here. We're getting very, very close to that, 7, 8, 9 time frame where we could be rolling right over here, trying to maybe peak or roll right around this area. And again, this is just from example and knowledge that, you get anywhere from 3 to 5 days into a trend, and you should start really being concerned with a potential rotation. 2 to 3 days is a pretty minimum trend. Okay. And we could get this little rotation where it doesn't do much and moves around, but the market moves in waves. You can see it. I mean, it really moves in waves. So, a way to examine it is, rally up to here, pull back, 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 rally up to here, possible pull back. And so you can see these occurring with these pivot high and pivot low formations. So it's important to understand that, when you're trading, you want to try to trade into the sweet spot, which is that last little 30-50%, last little 30-50%. Last little 30-50%. And remember, when you start to get into these areas, like you get these pullbacks, you see this lower high. Okay, that gives you a little bit of complication or understanding that you're going to be potentially breaking. But again, you want to try to catch these little sweet spots. Like this is a great example. You can't catch this move. This was the election, but you might be able to have caught a couple of these for a day or two or three. And that gives you that opportunity to ride these little 5, 6, 7, 8, 9 day kind of rotations. Make sure I got the right one. And get rid of some of these. Now let's go back over to the QQQ. And let me change my list here to the watch list. And so let's go over here to the QQQ. And we're kind of looking at the same thing, 508. Qs are much weaker as terms of a rally phase. We're looking at opening right around this area potentially. And again, we have that same 1, 2, 3, 4, 5 type of 6 upward bars. So we're going to be right over here today, right into this potential flagging mode that I drew a while back. This channeling here would be interesting if we did peak out and actually flag in this area. But again, I'm just warning you that we don't have any real breakdown yet. Okay. And we're getting fairly large, half percentage point gap up today in, again, that carryover trend. So remember, we're carryover and trending mode. We could see a rollover take place today. And we could see this, really weaken near the end of the day. So I am not going to tell you at this point, like I said, you should be trading much smaller capital. You should not be swinging for the fences. Like I told you, move the cash down here, hedge longs through the election. That's now over. We're looking to try to buy into this anchor low if we get it, or into this secondary support zone, which is really going to occur out here on the 10th. In other words, I don't think we're going to have a lot of opportunity anywhere in the markets until we get out here for traders to really start to potentially load up. So everything should be very small, in my opinion, right now. And going into the end of the year, I still think we have a chance for the anomaly breakdown. The Qs are breaking down, as you're aware here. We've seen some movement in the sector spiders, but we're really just, struggling to get out of this range. And remember, we need to get up above this level, 515.34. There's the level. We need to get up above that level to see this thing really break to the upside. Okay, gold and silver. Nice little rolling pattern in gold and silver. You see silver's falling all the way back down again, rejected off of this. Little bit concerning here with silver rejecting again off of this. The move here in gold, I still think gold is going to try to break 3,000 by the end of the year. So, I'm going to just tell you here, this is a 1 hour chart, and this goes all the way to the end of November. So this is kind of drawn a little funky. Let me go over here to 4 hour, and we'll get to the end of the year. There we go. And I do believe that gold is going to make a move, and it's going to make a move back up into this 2760, 2780, then attempt the 2820 range up in this area. And then I really do believe that we're going to move at slightly higher up into this 2940, 2980 area into the end of the year. That means that silver, which is struggling to really find support right now and has technically established a new lower low. So this is rotation. And you can see here, I will redraw these in purple. You can see this coming down here. In fact, let me do it as a line. Purple. Perfect. And purple. So you can see we stayed within this range here. What does it mean when price is staying within this range, guys? Okay, we've established the low here, which has now been moved down to this level. So I'll leave this here, shrink this a little bit. And then here. Okay, so what this means is that silver is struggling to find support. Okay, it's continued to establish new lower lows, Fibonacci price levels, moving downward. You can see them here. I'm drawing them. But we have the ultimate low down here. Okay, the ultimate low is down here. And this is the low that means the most to us, because this, within this range and within this flagging range, this is a secondary low that we need to pay attention to. This is the intermediate flagging level here. And I'll draw that in that dark greenish color. So we need to see silver stay above this level, and particularly must stay above this level. Otherwise, we're in a downtrend again. And what we're looking for is this flagging to end, these lows to terminate, making new lows and moving back up to try to get into a breakaway phase. That's what we're looking for. Gold has already moved past that breakaway phase and accelerated upward into this new current cycle formation, which is, again, the consolidation phase. So what we're looking for here, silver has not made that move yet. So this is still the consolidation phase. You can see the one right here. It's under here. There it is. Moving up to the 3. This is the consolidation phase still in silver, turning into a big, broader flag here. So we are in consolidation off of this pattern where we have already broken this intermediate consolidation, moved up to a secondary consolidation phase here off of this flagging. Now we're looking to see if we can get to that ultimate high. I think that we need to see gold, okay, move, and where we would be cautious here is, again, we've established this new low, so we would technically need to see gold stay above 26.21 here as a key price moment. And again, through this consolidation, we've seen this deep rotational low in gold just recently. We need to see that low hold. Through this rotation, we can stay anywhere in this range, meaning anywhere in here without changing direction. Technically, we're bullish, so I'll change this to green. We can stay anywhere in this range and still be bullish, expecting this to move higher, because we have the big picture off the excess phase peak patterns moving into consolidation. Now, through Fibonacci, we can actually look at this new lower low, saying that we are contracting downward on a short-term pullback until we find a base and start establishing new higher highs. Okay, and we need to I drew this wrong. This has actually got to come up to this high. So again, guys, we are technically long-term bullish, looking for this big breakaway. Intermediate term, we're setting up another flag. You can see it. I mean, here's the high, pulling back. we're setting up another flag. And that's really, I mean, if you look at all of these excess phase peak patterns, they a flag into a breakaway into consolidation, which ends up being another flag, which breaks away into a bigger excess phase peak, turns into consolidation, which ends up being another flag, breaking away to the ultimate high. That's the three waves. So you're basically getting the one into the consolidation, breaking up into the, so here's one, two, three. Very simple. It's a constructive pattern. I love it, but it's very simple to understand because it falls into alignment with the classic teachings of Japanese candlesticks, the three mountains, the three tops, the Elliott wave theory, having five waves, complex waves can be in between. It's just a big, broad structure in price that I like, and I love it actually. I think it's very key. If you've been following me enough, you know that it works. You just have to understand that, we have the big picture, we have the intermediate picture, and then we have, let's call it the microscopic picture. So understand that this is something that traders need to be aware of when I'm talking about big picture trends. I'm talking about gold moving up to 3,000 in the next 25, 35 days. When I'm talking about what's going to happen over the next hour, gold is in this downward channel. We need to see it break. It could go a little bit lower down here, maybe 2640, 2650. I would think it's got to stay above this lower level, 2622, to stay in this uptrend. Breaks below this lower level, we're back in a downtrend. Where it's going to go over the next 3 days, hypothetically, the intermediate channel, well, that all depends on how this resolves here. If we get into a base mode and start to move higher, if we do and it moves higher and breaks this level, then I think we're going to be moving up into 2780, 2790. If it continues to trend downward and breaks that level, then we're probably going to come back down to this level here, which is our last flagging formation level here. So 2581. And again, we are in a short-term pullback in a long-term bullish trend. So that's why we should be, lightly accumulating down in this area for the potential upside move, staying very cautious right now of this low price level at 2560, basically saying we get below that and we could continue to move downward a bit further, another 20, 30 bucks. So be aware, guys. Okay, and then lastly, we'll come over here to Bitcoin. And Bitcoin is at, got to move all this. Okay. So this is daily. Come in here. We'll go to 4 hour. And again, we're looking at this excess phase peak pattern. We're staying below the 10,500 level that I suggested we would be at. We got above the 90. Whoops. We got above the 95,750 area. We have an extended rotating flagging pattern here. So let me get rid of this, get rid of this, get rid of that. Come over here, try to draw some lines. So we're going to come up, mark this purple, and we are going to then draw some flagging across this area and down across this area. So there's our flagging. And again, we are up near this excess phase peak. We've got into consolidation. We've gone through a number of patterns. Here's our big pattern, which ended over here into flagging, which was really up here. We flagged all the way out into this consolidation, moved into this rally phase here. And again, we could just as easily move above this level, which actually that is incorrect. We could move above this level to start a new rally. in Bitcoin. And as we're flagging downward here, we would want to pay attention to this apexing level here to the downside. Remember, I've highlighted how flag apexes are very important. So let me try to share with you this flag apex. So here's the flag apex, right? That's where the two levels come together right here, this yellow line and this yellow line. So when you get into flag apexes, you get this volatility. These are normally critically important, okay? And the point behind it is this becomes a major support and resistance level for price going forward. Now we have this volatility, we have this rotation, we have these independent little lows. So I would reference this volatility after the flagging formation, the apex formation here. I would reference that low and high volatility in this area and say that if Bitcoin fails in this area and really starts to contract downward, this could be the anomaly event that I predicted setting up. But we need to be very cautious of these levels. These become our previous support. We are, as you can see, moving into a peak, pulling back, setting up kind of a moderate upward flagging formation here. If we were to get below this level on this downturn, we would have technical confirmation that we are going to move back to this area, consolidate, and then break down to a low. Now, when I say this area, I'm talking either here or here or here or here. These are the immediate downside support areas. So we've got this flagging. We basically have two outcomes here, guys. We are long term in an uptrend, seeing if we're going to hit this 10,000 or 100,500. We are intermediate term in this pullback flagging formation, which means that we have an opportunity to either A, rally up to this area and extend, or B, come down into this area. So here's our A, B setup. And again, you guys should be trading smaller amounts right now. And then C, we are in this moderate flagging formation. So we are essentially expecting the trend for Bitcoin to be moderately upward while we're in this flagging formation until we break below this lower channel. So now we have this flagging. We'll draw this across here and assume that is the flag channel, and assume that is the flag channel. And again, that is our flagging formation from that rotational peak coming down to this low. And so we are going to see how this flag plays out. Tough to call this a breakdown. I mean, obviously moving down a bit, and you can see this if I go down to an hourly chart, you can see it's very clearly, rolling downward into the potential breakdown. So we need to see how this plays out as this rolls down into the potential breakdown. I would say ultimate short term, 60 minutes or less. Yeah, you're in a downtrend, guys. And you need to watch this area right here because that's the next standout low. And then after that, you're coming down to here. So you're looking at 97,044 to 95,840, let's call it. Okay, and that's very likely to roll downward. And if you get below 95,840, I'll mark that here, 95,840. And if you get below that level, then look out below. This is really your B, and let's call this a breakdown, because that's what it is. Okay, so again, teaching you how this all plays out. It's all a matter of perspective. Remember, you have extreme short term, let's call that 1 minute to 30 minute future reference. Then you have, let's call it short term, which is 30 minute to roughly 60 minute. And then you have intermediate term, short, let's call it extreme short intermediate term, which is roughly 60 minute to roughly 2 hours. So, and then we have intermediate term, which is roughly 2 hours to, let's call it 6 to 7 hours. And then you have intermediate long, which is, let's call it 7, 8 hours to, and this would be days now. And now you're talking 3 to 5 days. And then you have longer term. Oops. And these are based on a daily chart. So, long term on weekly is a little bit different. So, moderate long term is 3 to 5 days to roughly 10 to 15 days. And then long term would be 15 days roughly to, call it 35 plus days. And these are how you need to kind of look at timelines. So when I'm drawing these timelines and I'm looking at a 1 hour chart, where do I fall in? When I'm making these recommendations, I'm making recommendations in this area, basically right here. Extreme short, short term, or short to intermediate. And I guess it was trying to correct. Yep. Okay. You can correct me later. And so you need to understand the timeline. So these are the horizons. Think of these as, come here. Good. Micro, and then let's call it immediate, and then these are long term. So this is the broad perspective. This is the, let's call it the immediate, the near term. And then this is the micro, which is minutes away. So that gives you an idea of where we're at with this, okay? We have these 4 or 3 separate perspectives. 3 separate perspectives. The micro, the intermediate, and the long term. And really, I'm giving you everything in one picture. You have the micro indicating we're going to potentially move down, rebound, and either go up or break down. That's the micro, giving micro and intermediate. And then we have the longer term picture saying that we have this big flagging pattern setting up. As long as we stay above this level, we're going to continue to move upward. Particularly, that would be my expectations. And if we break down below this 95,840, then we're setting up a bigger breakdown, because that then confirms this new flagging formation, which I will draw in blue here. and this is the new flagging formation, that if we break down below this level, becomes our new breakdown point, which I've highlighted here. Okay, so we're looking for a breakaway. A is a breakaway to the upside, and that would be above this green level. Okay, guys, a little bit of a long video. I'm going to pause it there. It's 5:30. Good morning and happy Thanksgiving week. Let's try to make some money this week. Remember, keep your positions fairly small this week. Okay, guys, let's not get overly aggressive in this holiday week. Let's see what the market does today. See if we get that rollover pre-anomaly move, and see if we get gold and silver rolling back to the upside, which is what I really want to see to extend this upward move. We really have to see gold and silver attempt to really, silver in particular, attempt to really move higher. Okay, guys, back to my SPY chart, and that's it. Get some. Talk to you later.